Hi gang, this is Chris from thetraderguy.com looking at the upcoming December 28th Forex session. And in front of you is the cable pair, or the British pound versus US dollar. And a couple caveats that you have to think about this time of year is that liquidity is going to be low, massive moves not likely. Of course, headline risk can be over exaggerated in the same sense that there's just nobody here. So, having said that, any kind of financial shock, of course, could have a overly exaggerated move. But all things being equal, it's normally a fairly quiet time of year. Looking at the British pound, you can see a couple things, and I will actually zoom out on this so that we can see the weekly. And the first thing that I notice when I look at the British pound is that we could possibly be currently trying to form some type of complex head and shoulders. And while we haven't necessarily broken the neckline, which I have at 155, if we do, we've got roughly 1,000 to 1,100 pips downside, which of course catches everybody's attention, which would have us going to about 143, maybe 142, which would be right back here at these lows. So not a real stretch of the imagination if that happens. Of course, there's a lot of what ifs between here and there, so let's go ahead and take a look at the current situation. As you can see, I have marked 157 and 155. I basically think of this as a consolidation area. And if I'm going to elaborate on this, it's really, and you guys will have heard me talk about this before, they're zoned. They're not lines. So just because we broke down between below 155 doesn't mean that we violated 155, but we didn't break support. These areas seem to basically have about 200 pips that can move around freely, and then as you can see up to about 158 there's resistance, down to about 154 there's support. Of course, looking at this, I also think that there's support all the way to 153, and that's basically what's going on right now. We have this consolidation area. We have a lot of pressure to the downside, but there is a ton of support here. Now remember, 153 is the break of that neckline. So what I'm currently waiting on is cable to close on a daily chart below 153 so that I can get short for about 1,000 pips. In the meantime, though, it does look like we have failed again to break through the 157, and I'll keep that up for you as I switch to the 4-hour. Made a serious attempt at it during the session on Tuesday, but failed. Go to the 1-hour, and it's a little bit clearer. We had a nice surge there in the middle of the day, and then just kind of went flat. So the real question is, where do we go from here? More than likely, with the conditions being the way they are in the market, it's very unlikely we'll see some kind of massive breakout. Of course, it can happen, and you do have to be prepared for it. But personally, I believe that 158 is going to hold. I also don't think that 153 is going to get broken until New Year's. Will it get broken? Who knows? But it certainly looks like they're going to try. In the meantime, I personally have been shorting cable every time it gets a little closer up to 157. Full disclosure, I didn't do it today. I just simply wasn't paying attention to the market. But I've shorted it a couple times here recently. And as you can see, we've had several decent signals. Nice shooting star there, which actually hasn't come back to the bottom. So this shooting star, if that gets violated to the upside, that would be a very bullish sign. But you have to look at the chart a little bit beyond that, and you can see that there's a shooting star even above that. So a lot of pressure to the downside. We're going to squeeze, probably go sideways overall in this range until next year. Sometime in January, I would think, we may have some type of resolution. Will it be up? Will it be down? We don't know. But we have our levels in front of us. 158 to the upside, which is the end of the 157 resistance area, and 153 to the downside, which I'm even more interested in because then it becomes a bigger pattern. It becomes a larger head and shoulders. So those are the levels I'm watching on the cable. I will try to do several of these in the near future, maybe every day if I can get around to it. I have full-time classes and of course a full-time job as well as my trading activities. So busy, and of course the time of the year There's not as much to talk about, but I will update via Twitter. So feel free to subscribe to my Twitter feed at the Trader Guy. Of course, I will post little bits at Forex Factory, and of course, on the blog, thetraderguy.com itself. Thanks a lot, and if you have any questions, feel free to email me at chris@thetraderguy.com.